Hello everyone, this afternoon on the marketplace, IMF lifts restrictions on dollar auctions by Bank of Ghana after strong reserve build-up under the program, more as the local currency hits 16 cedis to the dollar. Also coming up, government expected to launch Eurobond debt exchange program this week as it seeks to restructure some $13 billion. Plus, the government misses T-bills target for 7 consecutive weeks, but interest rates ease across the yield curve. My name is Darrell Kwao. Thanks for being with us. Details coming up. Thanks for staying with us, everyone. Now, the IMF has lifted restrictions on the amount of dollars the Bank of Ghana can sell to the market under the fund program. Yes, George, I feel with more.
The IMF program had been restricted in terms of the amount of dollars it can sell to the market. This is because the fund program wanted the Bank of Ghana to focus on building up more reserves after its dollar inflows from offshore investors dried up due to Ghana's debt exchange program. But now, the central bank has built up more dollar reserves than what it was expected under the IMF program. But this review didn't come easy, as the Bank of Ghana had to push hard, making a case about how the cedi depreciation is being impacted by its fight against inflation. Checks from some of the major commercial banks have shown that, indeed, the amount of dollars that they are getting from the Bank of Ghana has gone up, even though it is not up to all that they requested. It is, however, not clear for now how this development is impacting on the Ghana cedi's recent recovery.
Well, joining us on Zoom is Associate Professor of Finance at the Andrews University, Professor Williams Wipra. Good afternoon to you. First of all, why were these restrictions important in the first place?
Good afternoon to you, Darrell, and good afternoon to your viewers. If you remember, the main principle for IMF giving support or coming to help a country is to help the country to improve their balance of payment. And this action is done through the country's ability to improve or increase their reserve requirement. So that is the major reason. The reason why we went to IMF because our balance of payment account was depleting. Now that we were given a threshold and we have been able to achieve it, data from the central bank as of June, our gross currency reserve was approximately 6.9 billion US dollars. The net international reserve approximately $4.5 billion. This is almost about 2 to 3 months of our import cover. So we have come to the level that I'm sure that's why they've considered this one. So for that reason, this is what IMF requires, that countries are able to keep international reserve so that this will not distort international payments.
So how do we maintain this strong build-up, and what are the risks going forward?
So if you see, for Ghana, we were lucky with the suspension of our debt payments. So that is one way we were able to show up or come out with this build-up. We have been very fortunate also seeing our crude oil prices fairly being within budget range and gold prices also going up. We are not lucky to benefit from the cocoa price moving up to around 10,000 metric tons. However, our export has been very a significant source of foreign revenues coming in. So these are the metrics that has really helped us to improve our our position. In going forward, the risks, if you as you mentioned, the risks we see is that if international commodity prices starts to drop, this may have an impact on our reserves. So that is why I'm sure that is why the vice president has talked about the gold program. That is, we buy our gold as a means of forex reserve. The other risk is that, as we are seeing, and because the central bank is focusing on building up reserves and not giving dollars to commercial banks to support trade, it is creating room for the black market operation. And that is why we are seeing that the black market price or the forex price, that is Cedi to dollar or the other currencies, have been going up. And the way to reverse it is what has currently been done. That now that we have been able to achieve the target, some of these forex should be released to the commercial banks to aid trade and it will reduce the pressures that is currently coming. In Ghana, normally between August and up to November or probably around October, there is a lot of high demand for foreign currencies because traders wants to go and import things to come and sell in Christmas. So this is the that effect that is currently causing the prices to go up. On the other side, Ghanaians also still don't have the confidence in too much confidence in the economy. They still see the foreign currency as a safe haven where they can invest their monies as compared to other forms of investment. There is some kind of fear in the system. We all know because the bond market has been shut. So people will also invest or buy the foreign currencies and keep as a means of savings or investment. So these are the metrics that is causing the issue. So once we're able to bring more foreign currency onto the market to support trade, we expect that the volatility in the foreign currencies should reduce substantially.
Yeah, well, interesting new developments this afternoon, just when we're coming on the air. The cedi has now crossed the 16 cedi mark to the dollar. So it's buying at 16 cedis 10 pesos, selling at 16 cedis 28 pesos. I remember just around this time last week, we're talking about how the cedi had posted its first appreciation in days to the dollar, just showing signs of some stability around the corner, but just showing right now that we are not exactly out of the challenges with the cedi.
Yes, it's true. Let me mention that there is something we call the weekend effect. It's in stock trading and also in currency trading. And mostly Mondays and Tuesdays normally see prices moving up, item prices. So people want to do their transaction, and as the weeks go by, we see that kind of the prices being stabilized and coming down. So let's wait and see somewhere Wednesday and what will happen with the central bank announcement that they are releasing funds to the commercial bank, and you see that we may see a little bit of reversal in this situation. In my mind, and based on some computation I do with the Ghana cedi foreign currency, we still be selling around the 15.5, 15.9, but not to get to the 16. The 16 may have to go, if it will happen, it will come around somewhere in November going to December.
So right now, no need for panic. Secondly, how sustainable is this stability we saw last week, really?
So you see, last week, the information was going around that the IMF was going to allow the Bank of Ghana to bring some currencies on the market. So that signal caused it, and it should have happened somewhere on Friday, but it's not just being announced. So once this information have come to the market, traders will know that there's more money, foreign currency coming to the market. And one trick is that those who are holding the currency now also want to profit from it. That's why they have caused probably an increase in the currency prices. It is anticipated that once central banks start bringing out the foreign currencies to the commercial banks, we may see a reversal, and then we will see that the currencies will be playing around the same rate as happened last week.
All right. Final one to do with the government seeking to launch a Eurobond debt exchange program this week. Is seeking to restructure some $13 billion this week. How do you see this play out?
I mean, we have been expecting this should have happened long. If you look at the rate that Ghana's IMF program has gone, remember the last time we spoke somewhere 2 months ago, I mentioned that there are still some issues that these external creditors were hoping that Ghana should be able to address, and I'm sure all these factors have been addressed. And let me say that we should be grateful to IMF because they have been able to, on their own, support Ghana to talk to most of these external parties to come to some form of an agreement. And I'm not expecting that this kind of discussion should go too long as it has been. Somewhere in September, and Ghana government should announce a completion of this particular exercise.
All right. Thank you so much, Professor Williams Pipra, Associate Professor of Finance at this university. We are grateful, as always, for your insights and perspectives. You're watching The Marketplace. Up next, your financial markets update. For the 7th consecutive week, the government missed its auction target for treasury bills. According to the auction results by the Bank of Ghana, the government missed its target by a marginal 1.66%. Here's more in this report.
The government got 5.203 billion Ghana cedis from a target of 5.319 billion Ghana cedis. All the bids tendered for the short-term securities were accepted. 3.725 billion Ghana cedis, representing 71.23%, were tendered for the 91-day bill. The uptake for the 182-day T-bill was, however, 1.251 billion Ghana cedis. It represented about 23.93% of the total bids. For the 364-day bill, 252.74 million Ghana cedis were tendered. Meanwhile, interest rates eased across the yield curve. The yield on the 91-day bill declined by 6 basis points to 24.78%. The interest on the 182-day bill also dipped to 26.68% from the previous weeks of 26.74%. Again, the yield on the 364-day bill also declined by 4 basis points to 27.81%.
Joining us on Zoom, Senior Finance Lecturer at the University of Ghana Business School, Dr. Benjamin Amwa. Good afternoon to you. So for 7 weeks, the government has missed its T-bills target. Is there a matter to worry about?
It depends on how you want to look at it or the viewpoint, but the unsuccessful attempt to meet the auction target can be attributed to some factors. One, you can look at the rate declines. In fact, the rate quoted in terms of the interest on these instruments compared to rates in the past have declined. So that itself may ward off some potential investors who may want to participate in the auction. Two, we also have to bring in the currency depreciation argument. Once your currency is not stable and it depreciating, its ability to serve as a store of value becomes questionable. So assets that are denominated in Ghana cedis, in this case, will not be attractive. And what you see is that investors on the market will decide to use other instruments than to use your treasury bill instrument. That is another factor. Then the last one that I will put across is that in the month of March, BOG came up with a policy that directed banks that were not lending to increase their cash reserve ratio. If you remember, that directive was a tiered approach to the cash reserve ratio. So banks that were not making loans to deposit ratio of 55%, or banks that were making loan to deposit ratio 55% had about 15% cash reserve ratio. Banks between 45 to 55 had 20% reserve ratio. And then those making loan to deposit ratio of below 40% were directed to make a cash reserve ratio of 25%. What it meant here was that the banks that refused to give out the loans will not have the opportunity to stock up investment in TBL. It was going to cost you more. Now, when that happens, the banks will not have the option of just buying TBL, which will then increase the demand for TBL, which will indirectly show in the target being met by the auctioneer. But what is currently happening is that because the banks are now rate averse and they prefer to rather pass on the funds to BOG through the cash reserve ratio, their investment instrument by way of the amount that they purchase in the form of TBL has declined or is declining based on the figures that we are getting. And if you say 7 weeks conservatively, we need to go back to when the directive came and then try to do a trend analysis and look at the increase in the cash reserve ratio vis-a-vis the participation interest in the TBL instrument. So our assigned 1, the declining rate; 2, depreciation of the Ghana Cedi; and then finally the increase in cash reserve ratio, which is indirectly making it more expensive for banks that refuse to lend, not just to make quick money by investing in TBL, but to pass on the funds to BOG in the form of the increased cash reserve ratio.
All right, so we are told that the government is seeking to raise some 24 billion cedis through the issuance of treasury bills in the third quarter. What are the implications of not meeting their target, and what are the alternatives for them, really? Okay,
if you look at the trend that we have seen in the target miss, there has been a decline. So initially it was about 19% in terms of the target miss, then declined to 6%, and then now we are having 9%. So the market is responding. The banks are responding. Behaviors are changing in terms of lending and in terms of repositioning of investment to participate in this TBL instrument. As to whether government will be able to meet the target, it's a different thing altogether, because if this trend should continue, one will say that, okay, government may be able to meet the target. But one cannot also say that because of what we have been seeing in the past. So I'll leave that particular prediction open to say that I can go either way. Government may or government may not meet the treasury bill target that is seeking based on the recent happenings that has taken place.
Yeah, I was also trying to find out what alternatives they would have in terms of borrowing or where to look at.
Yeah, if government is not able to meet the target, that becomes a very difficult one, because you can't go onto the international market. That is out. 2, the easy way out is for you to fall on the treasury bill market. Unfortunately, you are missing target. So what can you do? You need to fall on other sources. Mop up the tax revenue drive. Try to, inch up your activities and the push towards tax revenue and some other inflows that you may have to get, probably from the IMF and other supports that you get going forward. That is, if the treasury bill market dries up on you and you are not able to get as much as you would have wished to support your budget deficits.
All right, finally, I want to ask you about the Cedi. We are monitoring the retail market this afternoon, and it's cost 16 cedis to the dollar. The mid-rate is around 16 cedis, 10 pesos. I was just speaking with Associate Professor of Finance at the Andrews University, Professor Williams, who says, well, let's not panic here. Let's just wait a while. Let's wait till Wednesday, because this could be a weekend bump. He thinks that, we could hold the rate at 15 cedis, 90 pesos till November, when it's really approaching Christmas. What do you make of what the figures we're seeing this afternoon on the retail market?
16 cedis and over is not surprising if you have looked at the cedis performance. But for last week and then last 2 weeks, that there was some form of relative stability. Before then, the Cedi had had struggles or difficulties against the dollar. Now, the 16 or above 16, how easily will the Cedi continue to depreciate? I think that is what we are trying to look at. Normally, when the currency crosses to the next decade, there's a lot of anxiety and interest in the crossover. But how the crossover stays in terms of the period, whether it will stay above or below, sometimes it takes some time for one to be able to have a firm understanding as to whether it will stay above or below. We are talking about 16.10. It is possible that during the course of the week, it may decline a bit to about 15.8. It will stabilize before it will finally take another serious, or what I'll call sustained position, whether above 16 or 15.9. So for now, let's just hold it at the 16 and then wait and see in about 1 week or 2 weeks to see how the Cedi behaves above the 16 Cedis mark. Let's assume that this is just one of the market movements. And let's wait. In about 2 weeks' time, we'll be able to have a firm idea as to the direction that the Cedi is taking.
Well, interesting, this is happening just around the time the IMF has lifted its restrictions on the Bank of Ghana dollar auctions. Quick thoughts on that?
It's a good information to the market. What it means is that Bank of Ghana now, that is, if they have the needed resources, will be able to supply some more than what it pledged in the dollar issuance calendar. But will Bank of Ghana do it? Because you need to also look at your reserve and to know what is happening as far as your hard currency to support your international reserve is concerned. I don't think Bank of Ghana will just go out to release dollars in the market because of this information. Bank of Ghana would like to observe. The Bank of Ghana would like to have a tiered or a gradual approach in managing the situation. So yes, it is a good news to the economy. That is, if you're on the side that believes in a strong local currency. But of course, if you're on the other side that is using the dollar as a hedge instrument, then of course, if BOD decides to pump more dollars onto the market, your investment will have to stagnate for some time. BOD will take a gradual approach, but for now, it is a good piece of information to the market, and we expect that the market will respond accordingly, especially now that we are talking about the Cedi being above 16. Maybe with this news, the Cedi will regain some ground and then get back to 15, and then after some time, we'll see what the effect will be.
All right, Dr. Benjamin Amoah, I appreciate your time with us. We'll reach out to you some other time. Thank you so much for your insights and perspectives. You're watching The Marketplace. One more thing, a stock market update. Shares of MTN Ghana are expected to shed some value this week on the stock exchange. Here's Grace Munayan of DataBank Research.
Last week, the bourse registered 6 price movers, of which 4 were gainers and 2 were laggards. The gainers were New Gold, Total Energies, Trust Bank Gambia, and GCB Bank. The decliners were MTN Ghana and Cal Bank. Driven by the declines, the Ghana Stock Exchange Composite Index decreased by 1.96% weekly, to a year-to-date gain of 39.08%, whereas the DataBank Stock Index lost 1.08% weekly, to a year-to-date gain of 35.82%. Weekly turnover dipped by 94% to 6.8 million Ghana cedis after exchanging about 2 million shares across 22 counters. This week, we expect the share price of MTN Ghana to decline due to profit-taking activities. For Joy Business Reports, Grace Monanyun of DataBank Research.
Development Bank Ghana has revealed that it will be heavy on agriculture in the next phase of funding. The bank is setting aside more than 1 billion Ghana cedis to support the sector from next year. Kwamna Duka is chief executive and has been explaining to Joy Business why the focus on this sector.
There is really, and we can go through some of the numbers, there is really a big push into agriculture now over the last 9 to 12 months.
Help me out with the numbers, and not being specific per se, but over the period since your establishment, what has been the total support, in roughly the round figures, not exact, that you have played a role in extending to this sector?
Okay, so let's give you the headline.
Yeah.
So the headline is that to date we've lent maybe 1.6 billion Ghana cedis, right? But that's important because what that means is that if we continue at this rate, by this time next year, we'll be the largest lender in the country. If you're the largest lender in the country, you have influence. You have influence on behavior, and you have influence in terms of changing mindsets to see agriculture. And this is really important, not as a risk area, but as a business. Part of that, I think, in terms of the total that we've lent, about a third of that is into agriculture. We have
that is out of the 1.6 total lending.
Exactly.
A third of that has gone to the agri sector.
Agri sector. The other areas are manufacturing, ICT, and high value like tourism. But our focus very much is agriculture.
And that's the marketplace. More news on our website, myjoyonline.com/business. T-bills auction, government misses target again, but interest rates ease. We've been discussing that this afternoon. Also, MPS unfairness will render our 10,000 workers unemployed. LPG marketing companies. myjoyonline.com/business. My name is Darryl Powell. Thanks for watching. We'll be back same time tomorrow. Stay tuned.